working effectively with school business professionals. Today's webinar will be looking at the principles of effective financial governance. So before I hand over to Stephen, can I just check that everyone can hear by asking you to select the raise hand icon on your webinar control panel. Great, lots of hands have gone up, so that means we're all set. Just a reminder that the slides for this webinar are available to download from your control panels, but if you're having difficulty accessing these, they'll be available from our website tomorrow morning, along with a recording of this webinar that you can share with your colleagues. Stephen will also be taking questions during the webinar, so please do send those in using the enter a question field. So without any further ado, I'll hand over to Stephen.
Okay, thank you, Oliver, and good afternoon to you all. Welcome back to those that joined for the first webinar, and hello to those that are joining for the first time. As Oliver said, there'll be some opportunities for Q&A. I think the last session we found ourselves with about 10-15 minutes to answer some questions. So as we go through the slides, please feel free to drop in your questions, and we'll do our very best to get you some responses. So we're going to talk. The title of this presentation is "Principles of Good Financial Governance," but actually, as much as the principles, we are going to touch on the differences between the governance and assurance, governance, assurance, and accountability frameworks for both maintained schools and academies, and we'll actually touch on a description for the various schools that operate within our system. It is a mixed economy, and in some respects, that mixed economy means that there is a very diverse approach to the way that we deliver education, but also different approaches to the way that we govern and ensure rigorous accountability. So if we start by having a look at the traditional maintained context, where the local authority presides over the school, the governing body is accountable to the local authority. In turn, the governing body has responsibility and holds the head to account. Underneath the head teacher in your traditional local authority school, there is, and depending on the scale of the school, there may be deputies, assistants, and a school business leader of some description within that structure. And then, of course, underneath that, again, depending on the scale of the school, you'll have middle leaders and teaching staff. So that's, I'm sure, a structure that many will be familiar with. In terms of governance and accountability in maintained schools, first looking at the ownership of the physical asset. Well, for community schools, it's the local authority. For other types of maintained school, the land and buildings may be owned by a charity, religious group, or indeed by the governing body. Decision making and fiscal responsibility, well, that sits with the governing body and to an extent the local authority. And reporting requirements, well, everything's monitored and analysed by the local authority, and pupil standards and outcomes are if you like, assessed by Ofsted and their framework. In terms of revenue, sources of revenue and the disbursements, well, it's public money, and the funding is dispersed by the local authority. The funding allocations are based on a per pupil allocation, but it's important to note that what actually lands on a school's or head teacher's leadership team's desk varies significantly from authority to authority, and that's largely due to two fundamental things: contextual factors and the influence of schools forum. So, different local authorities may decide to place emphasis in different areas. Consequently, that will that will have an impact on the formula factors and the way that money is then allocated. Once schools receive their allocation, they have a reasonable degree of autonomy over those funds, and typically the local authority keeps a proportion back for central services. If we move on to academy trust structures, and I'll say as a starter, this is a very vanilla structure. I recognise things like hub and spoke, where you have this kind of structure replicated regionally with a central arrangements overseeing regional hubs and so forth. But this is in essence a kind of core elements of a typical academy structure. So we'll see that you'll see that there are members equivalent to shareholders who have ultimate sovereignty over the whole structure. They're quite passive in terms of their activity, but we'll get into a bit more detail in terms of what members are responsible for, what they do. They delegate operational tasks to a group of trustees, essentially directors, non-executive directors, and in turn they delegate responsibility for the running of the trust to an executive team. And there you'll see chief executive with a team of executives supporting them, and then local arrangements. So if we get into a description of the roles of both the trustees and members, quite often trustees and members are confused. Their roles are confused, and that's, I think, partly due to the fact that in other charity sectors, it's quite normal, quite typical to have trustees and members as one of them in the same thing. That's quite different in the academy world, and I'll explain why that's the case. So in theory, academies must have up to 3 members, sorry, at least 3 members, but the DfE policy has required academies to have 5, and that's to avoid any deadlock with special resolutions, and you can see the logic behind that. Members are simply those that have agreed to be members and whose names will appear on the register of members. Members are those individuals that have agreed to establish the trust. Subsequent members are appointed by members as and when required. Where trusts are established to operate academies with a religious character or founded by a sponsor, it's quite normal for members to be either the foundation or the sponsor itself. Members can be either individuals or other corporates or a statutory body. Moving on to trustees. Trustees are responsible for carrying out the business of the charity or the trust. They delegate responsibility further to a management board or a leadership group made up of executive officers. And clearly the director / trustees have responsibility to act in the best interests of the trust. That's their core purpose. And coming back to the question, can members be trustees? Yes, in theory, and it's common in the wider charity sector. However, what you'll see in the DfE's governance handbook, it recommends that there is separation between members and trustees. And this ensures members can properly hold trustees to account. And you can see how not having that segregation, there could be conflicts of interests. So what do members do? Well, essentially, they determine the ethos and the purpose of the trust and the way it will be governed. They're there to participate in governance by appointing and removing trustees. That's their principal function. And members have the right to receive the trustees' annual report, and the accounts, and they're invited to attend the AGM. So what are academies? Let's get into the weeds of what we mean by an academy. So an academy, Academy Trust is an independent charitable company. It's a central government public sector body. Academies are responsible for their own financial management, but subject to the public standards of accountability. The DfE is the principal regulator and responsible for financial compliance and adherence to charity law. The ESFA is the oversight agency, and the idea is that the ESFA provide Parliament with assurance that high standards of propriety and regularity are kept. The ESFA ensure a reasonable balance between academy independence and accountability, and to that end they work with a steering group of practitioners to ensure that the balance and the proportionality between accountability and bureaucracy is right. Okay, we're now going to move on to financial accountability, the accountability framework and assurance arrangements. So there's a very important document for academies, and that's the Academy Financial Handbook. And this handbook sets out financial management, control and reporting requirements. It describes a financial framework focusing on key principles. It sets out the freedoms that trusts can enjoy. It describes delegated financial authority levels and the circumstances where the trusts or a trust needs to seek approval or consent from the Secretary of State. Compliance with the handbook is a condition of the funding agreement, and the latest edition is the September 2019 version, and that's downloadable. It's downloadable as a PDF. So, I mean, if you just Google Academy Financial Handbook, what you should see come up is a link to the area of the .gov website, and what you're looking for is the September 2019 version. Just a point, kind of an aside really, it's really important that trusts comply with the not-for-profit principles set out in the handbook, and there's been a recent spotlight on related party transactions. I think as a rule of thumb, avoid what's known as RPTs at all costs. If you can procure a similar service, even if it's marginally more expensive, without compromising yourself or colleagues, then really, in all cases, avoid the unnecessary scrutiny and criticism. I mean, I've heard lots of arguments suggesting that it's a shame that governing bodies and trusts can't enjoy more competitive rates by procuring services from within their own community, but really the savings are marginal, and the unnecessary scrutiny that will come with that kind of activity and criticism is just not worth it. So my recommendation is just avoid it like the plague. So moving on to due diligence, and it's interesting. Often schools considering a move to life within a multi-academy trust, either within an existing trust or going it alone, although they do a lot of the legal due diligence, they often forget to do the financial due diligence in advance of making the move. So the FMGS is really a helpful checklist to navigate your way through that due diligence process. And it's interesting, actually, the regulations, the guidance suggests that you should have done it within 6 months of having converted, but I would suggest that you do it far sooner. And if you haven't done it already, it's just a good checklist in terms of having a look at your own financial health. So there's a link later on in this presentation to the area the DfE website, where you can download the checklist. The financial management and governance self-assessment process, it's an online checklist that highlights the main considerations for new academy trusts, but as I say, actually useful for existing trusts as well. The checklist applies from the date on which the funding agreement was signed, and I believe you have up to 6 months to comply, but I wouldn't wait that long. The sooner you can do this, the better. It's a way for you and the ESFA to gain assurance that your academy's trust is financially in a strong position to move forward. And really, the investment in time to familiarise yourself with this document is well worth it. And what does the checklist covers? Financial oversight, financial planning and reporting, risk management and internal control, delegated authorities, procurement, tendering and related party transactions, which we've just discussed, and executive pay and transparency. Again, executive pay is something that the department are paying considerable attention to, and are minded to hold the trust to account if they are paying disproportionate levels to their senior leaders. The Academy's accounts direction is a reference pack for Academy trusts and auditors when preparing financial statements. It's a supplement to the Academy's financial handbook. In producing the accounts direction, the ESFA takes requirements set out by the Charity Commission in its Statement of Recommended Practice, otherwise known as SORP, and it translates them into a form applicable to Academy trusts. There is, interestingly, an ongoing debate about the value and the viability of an Academy-specific SORP, as the problem we've got at the moment is that elements of the standard SORP are considered not to be contextualised enough. And sometimes considered, that there are elements that are thought of as sledgehammer to crack a nut for academies. So we're not there yet, but there are interesting discussions going on in the background as to whether that might be something that we can look forward to in the future. The accounts direction outlines requirements set out in Academy Trust's funding agreements with the Secretary of State, and include preparation of an annual report and financial statements to the 31st of August, accounts to be audited annually by independent registered auditors, the production of a statement of regularity, propriety and compliance, the submission of audited accounts and auditors' regularity assurance report to the ESFA by the 31st of December, the filing of accounts with companies registrar as required under the Companies Act 2006, and publishing of audited accounts on the Trust's website by the 31st of January. So quite clear about what its expectations are in that regard. So who audits the academy sector? And it's an interesting one, because one of the criticisms of the academy program, the academy project, was that without local authority oversight, who was really holding the academy sector to account? But it's quite straightforward. The National Audit Office, auditors of the department's group of accounts, which include academies, had produced a set of clear expectations. The academy auditor's role in the department's group accounts, the NEO's expectations of academy auditors, the risks of material misstatement in the group financial statements. So an important, very important oversight role there. Okay, moving on to fraud and financial irregularities in academies. There are a number of ESFA resources, hopefully, that will help academies to manage their finances in a transparent and effective way. And the idea is to reduce the risk of fraud or financial irregularity. And this includes a list of indicators of potential fraud and a checklist to help review arrangements for preventing, detecting and dealing with fraud. And I think as governors, as directors, trustees, there are a number of things to consider to reduce the risk of fraud. And I'll just go through these very quickly. Ensure that there's anti-fraud and whistleblowing policies in place. Conduct regular anti-fraud awareness training, really important. And that's not confined just to the trustee group. It should be something that's conducted across the SLT, certainly the executive team, and perhaps into areas of middle management. Highlight to staff that they can also contact the SFA with any concerns. So there is a whistleblowing route that circumvents the trust itself if there are real concerns. It's important that management have communication routes to pursue and identify any potential incidents. Again, this is pretty basic stuff, but important. Ensure financial controls are regularly assessed. Ensure there is appropriate segregation of duties. Review your processes for background checks on new employees. Scrutinise significant business transactions and personal relationships to avoid conflict of interest. We talked about that a little bit earlier. And install a physical security system to protect any assets. So we've talked about academies, and we've talked about the level of scrutiny. I think it's clear that there's some robust requirements, and the assurance framework is pretty tight. But there's a new focus on maintained schools, and as part of the drive for more consistency, the Department for Education have opened a consultation on applying some of the financial measures used in academies to local authority schools, and recognise that this in its own way will be quite controversial, and there's already some pushback in terms of additional administrative burdens on small schools. But nevertheless, I think you get a sense of mood music at the department, and Lord Agnew in particular is keen to achieve parity in terms of the financial rigour and accountability regime, both in the maintained and academy sector. Academy trusts already have strong financial reporting requirements, e.g. the publishing of annual accounts, seeking approval for related party transactions, and reporting on highly paid staff. We've talked about that in the previous slides. The consultation sets out proposals for changing arrangements, and the idea is to bring local authority schools in line with the requirements and high standards that academy trusts are already having to meet. And I'll just give you an extract of a quote from Lord Agnew, so you can get a sense of where he's taking this. And Lord Agnew says, we can be certain that an unprecedented level of accountability and transparency has been brought into academy finances, with these robust processes allowing us to spot financial mismanagement. And then he goes on to say, arrangements typically in place in local authority schools are not equal to those of academies. So again, just reiterating that this is the appetite that Lord Agnew and his team have for creating parity across maintained and academy, the maintained and academy sector. And I think it's worth saying that some of this has been triggered by data collected between 2016 and 2018 that showed that there was a larger percentage of maintained schools with accumulated deficit as compared to their academy counterparts. So the aim now is to strengthen arrangements for maintained schools, but the DFE will be sympathetic to any additional bureaucratic burdens, and the benefits of any changes will need to outweigh any burdens. Okay, so we've talked about accountability, we talked about structure. I'm going to move on now to understanding the difference between the types of schools that exist within our system. And just a quick canter through to begin with academies. We talked a little bit about their composition, but let's just revisit some of the characteristics. All academies in England have the same status in law. They are publicly funded independent schools held accountable through a legally binding funding agreement. They have more freedoms and control over curriculum design, school hours and term dates, and indeed over staff pay and conditions. Free schools, which in terms of their makeup, their legal status, they're very similar to academies. They are termed as new state schools. Who sets them up? Well, essentially it's teachers, parents, existing schools, educational charities, universities, community groups. To do so, the group must form a limited company and choose members and directors to run it. Free school companies must use a DFE model, memorandum and articles of association. Free schools are independent, free from local authority control. Like other academies, they are held accountable through the funding agreement. So just looking at the different types of academies, traditional or type 1, as they're sometimes referred to academies, they were usually underperforming schools that are allocated an academy sponsor to take over them. Like free schools, academy sponsors can be universities, FE colleges, education charities and business sponsors. Traditional academies are independent, free from local authority control. They are held accountable through the funding agreement. Academy converters, we started to see the emergence of this new type of academy following the Academy Act in 2010. Academy converters were typically good schools already in existence who decided to opt out of local authority control, initially to gain independence and autonomy, and at the time would have enjoyed some additional funding through what was known as LACSEG. The school governing body signs a funding agreement with the government and are independent from the local authority. Okay, moving on to maintained schools, and there are a number of maintained school types. And I think it's important to say, while the number of academies in England is expanding, the majority of state schools in England are still maintained schools. They are overseen by the local authority. These schools must follow the national curriculum and national teacher pay and conditions. And there are 4 main types of maintained schools. And the differences are related to who employs the staff, who owns the land and buildings, who controls the admission arrangements. So the first type of maintained school is the community school. And these schools are controlled and run by the local authority. The local authority employs the staff, owns the land and buildings, and determines the admission arrangements. The second type, foundation and trust schools. These schools are run by their governing bodies. The governing body employs the staff and sets its own admission criteria. The land and buildings are usually owned by the governing body or the trust or charity. Voluntary aided schools, the third type. The majority of voluntary aided schools are faith schools. A foundation or trust inputs a small proportion of the capital cost for the school and forms a majority on the school's governing body. The governing body employs the staff and sets the admission criteria. The land and buildings are usually owned by religious organisations. The next type of maintained school is known as a voluntary controlled school. VC schools are like BA schools, but are run by the local authority. The local authority employs the staff and sets the admissions. The foundation or trust owns the land and buildings and usually forms a quarter of the governing body. So you can see there are many different types of schools, and you can see, just through that snapshot, that the degree of autonomy and freedom that each of those schools is enjoying differs enormously. Even within the maintained group, you can see that ownership and autonomy is quite diverse. Just moving on to the core differences between free schools and academies, and indeed the maintained sector. I think that these differences really centre around a number of areas. So firstly, the curriculum, the students, the way finances are managed and flow, personnel management, governance and accountability. Now, I'm going to take you through, for the remaining part of this webinar, a grid which really sets out the key differences between the different types of schools. I'm not going to go into every description in the grid, but it'll start to give you a sense of how the mixed economy of schools that we operate within is how the characteristics can be described. So if we start with curriculum, so first of all, under the heading of curriculum, you can see that there are differences in terms of the expectation for free schools, academies, maintained schools, and independent schools. Maintained schools must follow the national curriculum. Free schools and academies are exempt from following the national curriculum, but there are some stipulations around core subjects such as maths, English, and indeed science. Again, still under the heading of curriculum, the assessment regime differs for free schools, academies, maintained schools, and independent schools. Obviously, sit outside that. So free schools and academies are required to assess students in accordance with their funding agreement. In terms of maintained schools, students must be assessed at all key stages. Again, under the heading curriculum, teaching hours, you can see that free schools and academies are free to change the day and the length of the term. Maintained schools, voluntary controlled and community schools must go through a lengthy consultation process to change the school day. So again, you're getting a sense of the freedoms which are afforded to particularly maintained academies and free schools versus maintained schools. Still on curriculum, specialised programmes, free schools and academies must establish a clear special educational needs policy, and for maintained schools, it's a case of following the code of practice, and the LA will always oversee the provision. Outcome indicators, student outcomes are monitored through inspection by Ofsted, and that's consistent across free schools, academies, and maintained schools. Obviously, independent schools will sit outside that. Moving on to students, any restrictions on age ranges within the school. Free schools, in terms of the age range, anything between 5 and 19 is within scope. For academies, the same. And for maintained schools, it very much depends on the local authority. Admissions, and this was one of the key drivers for many schools wanting the additional flexibility around admissions to moving to academy status. You'll see free schools and academies, no selection by aptitude is permitted. For academies, no selection by aptitude is permitted. However, priority, well, free schools anyway, priority by faith limited to 50% of pupils, and they can prioritise up to 10% of secondary pupils on aptitude. Academies can prioritise up to 10% of secondary pupils on aptitude. For maintained schools, selection by ability allowed for grammar schools but no other schools, and like free schools and academies, can prioritise up to 10% on pupils' aptitude. Caps on the number of students. For free schools, primary classes limited to 30 pupils by statute. There is actually no cap on secondary. The same applies to academies. For maintained schools, primary classes limited to 30 pupils per statute, but in secondary, none. So there isn't that much, well, in fact, there is hardly any difference between free schools, academies, and maintained schools in terms of caps, cap on student numbers. Moving on to finance, the source of revenue and the disbursement of any funding. For free schools, it's public money, funding dispersed directly by a formula calculated by the DFE. Funding, of course, varies between local authorities, and we've talked about that in previous slides, and indeed we touched on that in the first webinar. Similarly, for academies, although academies themselves may enjoy additional funding from the academy sponsor, and for maintained schools, it's public money and it's dispersed via the local authority. The revenue per pupil allocation for free schools comparable to state schools in the local area. Academies the same. It varies significantly from local authority to local authority, and this is one of the problems with the situation that we have at the moment with a soft funding formula and the flexibility that local authorities have to move money between the various funding blocks. Again, for those of you that joined us for the first webinar, we talked in quite a lot of detail about that. In terms of the allocation of funding, free schools have full flexibility to allocate funds as they deem fit, as do academies. In the maintained sector, schools are free to allocate all funds received, but LA will always keep a proportion back for central services. Moving on to personnel management, the teacher selection criteria. This is really quite interesting. Free schools not required to have teachers with QTS, but are required to have a training and development plan. Academies do have a requirement to employ QTS qualified teachers, as do maintained schools. In terms of non-teaching positions, free schools free to hire as required, academies the same. Maintained schools, it very much depends on the school type. And performance incentives, free schools free to set their own pay and conditions, as are academies. Maintained schools must follow national pay and conditions. So again, another example of how the autonomy that free schools and academies are enjoying compared to maintained schools is quite different. Performance management, free schools are free to evaluate and manage performance as required. Academies likewise, but in the case of maintained schools, performance management is overseen and often performed by the local authority itself. Moving on to the ownership of physical assets, and we've talked a little bit about this in the previous slides. Charitable trusts must be not-for-profit, but within that could include parent-teacher groups and universities. Academies are considered to be charitable trusts. and they will own the physical assets, maintain schools. The assets are owned by the local authority for community schools. That may differ for other types of schools that we've described before, such as voluntary aided and foundation schools. Decision making and fiscal responsibility. That resides with free schools, with the trustees and the governing body. Similarly, with the for academies, and for maintained schools, it's the governing body. The involvement of the private sector. Well, for free schools, they're able to subcontract elements of running the school, as are academies. But I think that it is permissible for maintained schools, but there are going to be much greater constraints for maintained schools in their interactions with the private sector. So whilst it's technically possible, the likelihood is a lot lower. And another example, yet again, of how free schools and academies are able to operate outside of the constraints of the local authority. Just quickly moving on through the last few sections now. Reporting requirements. So in terms of accountability, the reporting requirements for free schools, analysis and monitoring is performed by the DFE and Ofsted. For academies, everything's monitored by the ESFA. For maintained schools, it's essentially the local authority and Ofsted performing their function as regulators of pupil outcomes. And in terms of public transparency, all results are made publicly available, both in terms of free schools, academies, and maintained schools. Okay, so I suggested that the webinar would take us about 45 minutes, so we're pretty close to that point now. So that gives us about 15 minutes to go through some Q&A, and I'm happy to pick up any questions that that people want to pose. Okay, I apologize. I've just seen some questions, some comments coming in about the quality of the audio. So I can only apologise for that. I don't think we haven't done anything different in terms of the technology. I'm certainly using the same equipment with the same server. But you know, we talk to organisers afterwards and see if we can make sure we fix that for the future. But the first question I'm going to respond to here is if there is indecision on who should chair the trust board, can the members determine or advise what to do? And I think the answer to that is pretty straightforward. Is yes, that they can. I would need to take advice as to whether they can impose their will on the board. I guess technically, ultimately, they can, because it's within their gift to remove the board in its entirety. But I think in the main, the members leave those arrangements to the trust board itself. So I think, whilst it doesn't directly answer the question, I think the important thing is to try and reach consensus across the board. If there's an absolute stalemate, deferring the decision or referring to members to get you out of the impasse seems like a sensible way forward. I'm not I'm not sure, and I would have to seek advice as to whether there is any kind of legal precedent for members to insist on a particular individual taking the chair. There's a question here about so the EFSA. Essentially, the EFSA is the agency that work within the Department for Education to provide assurance to Parliament that the academy sector is operating with due reference to the accountability arrangements that have been set out. So, for example, the adherence to the accounts direction and the academy financial handbook. It is an arm of the Department for Education, but does operate slightly independently. But it is an agency that's tasked with ensuring, if you like, in the absence of a local authority, it is that agency that is providing the oversight that some were concerned about when we gave schools greater autonomy. There's a very good question here. Would you expect local governing bodies of individual academies to carry out the FMGS process? And my response would be, whilst in a multi-academy structure, we're seeing local governing bodies taking more of an advisory role and focusing more on standards than financial accountability. I think it is no bad thing for a local governing body, or in fact any stakeholder within the trust, to have a look at the FMGS checklist. I think it is something that sits with the trustees and with the directors, but for local governing bodies to be aware of the checklist, to be cited, and to have confidence themselves that their own local schools are compliant is, I think, good practice. So there's a question here: who is government actually consulting with on the proposed changes to the scrutiny of maintained schools? Well, it's an open consultation, so anybody can respond. You can respond as a school, as a governor, as a trustee, as an interested member of the public. So there are no restrictions. The government, the department would welcome responses from as broad a constituent of respondents as possible, and that will provide them with a much more representative view of the recommendations. I think that goes for any consultation. So the consultation is still live. There's only a couple of weeks, I think, left for it to run. But if any of you are interested, if you just Google local authority transparency, financial transparency, you'll see the consultation. It's a fairly straightforward consultation. It's quite quick to navigate your way through it, and I'm sure officials would be really delighted to have your responses. There's a question here, and I think this is just a kind of comment more rather than a question, but it's worth sharing with the other people on the line. So the gentleman that's thanked me for the explanation of the different types of schools, but has requested more information on effective financial governance. I think what it might be useful to do is if you participate in the third of the 3 webinars, what I'll be touching on is, rather than the accountability framework and the distinction between the various types of schools in the system, I'll be talking much more about financial planning, financial scrutiny, integrated curriculum-led financial planning. So we'll go a lot deeper in terms of how you make financial decisions, how you hold your executive teams to account in terms of the assumptions that they are making when building their when developing their strategies and building their financial plans, and also how to ensure that that the optimization of how to ensure the optimization of resources and value for money. So we'll really get into the weeds of, if you like, making sure that there is proper governance challenge around those areas of activity. So yeah, I appreciate that this has been more about the overarching framework than it has been about the practicalities of financial governance within a particular trust. There's a question here from one of the delegates that obviously wasn't able to join the first webinar, and has said, how can we get a copy of the first set slides? I'm sure Oliver can make that happen. I think they're online anyway, so the slides and the recording is there for you to go into. A very good question here. Somebody's asking about using a local contractor that might have a link to the school, or might in some way be conflicted, but then has asked the question, what if it's the best provider? Well, I mean, that was kind of the point that I was trying to make, is that there could be circumstances where a member of the community that's very close to the school, perhaps even sits on the governing body, or is a parent, or has links in some way, that could provide a very competitive competitive rate, competitive service, or offer to do a piece of construction at a fraction of the price of others. I think you've got to be very, very careful. So there are a number of tests. If you go onto the Charity Commission website, if you look at the tests for related party transactions, what you'll see is that it asks a number of questions. First, it asks whether there is absolutely nobody else that the trust or the charity can get that level of that quality of service from. It's very rare that is the case. It then asks whether or not the difference between the price that's being offered by the related party provider is materially different. So is there such a significant difference in the price that it warrants the additional scrutiny because it's a related party transaction? And then it talks about the extent to which the trust or the charity has entered into a very transparent tendering process. So has that service been tested alongside other potential providers? Now, it may be that in very rare circumstances that you meet the test on all counts and you decide to take the risks associated to procuring the services of somebody related to your trust. But it might, in my experience, the risks associated to doing so and the potential attention that you're going to attract by doing so do not warrant taking the chance or procuring from somebody that's so close to your organisation. So yes, there may be very, very rare circumstances where it's the case, but again, I would avoid it wherever possible. Another question here about the consultation. I guess this is the consultation on local authority transparency. Can governing bodies take part? Absolutely, they can. And when does the consultation end? I believe it's the 30th of September, but it's worth us checking that, and perhaps through Oliver I can get that information to you. But I think it's still open for a couple of weeks yet. There's a question here, not necessarily directly related to the slides, but again, I think it's an important point. What's the recommended approach to benchmark the non-teaching positions, and whether these roles are optimally deployed in maintained schools? Where there's plenty of benchmarking data out there, and if you go onto the school resource management self-assessment site, you can plug in your establishment numbers, and you can look at whether you are an outlier in terms of national trends, or whether you are within a range which is deemed to be within the national averages. I think the danger with benchmarking is it's context is king. So yeah, I think we always need to be cautious not to be slaves to the absolutes that come out of benchmarking, but nevertheless it will give you a sense of whether your particular school or trust is spending more than other schools with similar characteristics, and you should be able to get out of that both teaching and non-teaching costs. I would argue that that there are metrics out there, which is something that we're going to talk about in the final webinar, particularly metrics linked to integrated curriculum-led financial planning, which will give you a sense of whether your the levels that you're spending on non-teaching positions is proportionate to the scale of your operation, and we can certainly look at that in the next webinar. Okay, I think there's just time for one more question. There's a very good question here, potentially quite provocative, but nevertheless very legitimate. The delegate's asking what is deemed to be not transparent at the moment in maintained schools. I don't think the concern is that the maintained schools aren't transparent. I think the issue is that the approach to financial health, the degree to which and the frequency with which maintained schools are reviewing their financial position and reflecting on processes and procedures is very mixed. There are clearly some outstanding local authority maintained schools that operate with the highest standards of financial due diligence, risk management, and report as effectively and efficiently as any academy trust. But on the other side, there are some schools that, for example, haven't been audited for many years, and maybe have a less rigorous approach in terms of the way they report. In fact, there is a paper that was produced by the Department for Education I think it was published only last week, on school business leadership and the different approaches across the system. And many maintained schools only report their financial position on a termly basis. So they don't report to stakeholders on a monthly basis. They don't do monthly management accounts. And in and of itself, that isn't a disaster. But the trouble with reporting only on a termly basis is that's quite a long period within which things can go horribly wrong. And that means that the governing bodies, trustees, members of the SLT can't react if they don't have the information in front of them. There's that kind of thing, really. It's not really about anybody suggesting there's impropriety or irregularity. It's more about a consistent approach and making sure that the maintained sector is transparent about its undertakings as the academy is being asked to be, so that there's more consistency across the system. Okay, well, I think that's our hour. I hope that in its own way was useful again. I'm looking forward to the final webinar next week. So at that point, I'll hand back over to Ollie, if that's okay.
Yeah, thank you, Stephen, and thanks to everyone for attending. I hope you found it useful. We'll try and get the sound issues ironed out for next week. So yeah, same time next Thursday, we'll be joined by Stephen again for the final webinar on financial planning and value for money. This webinar will be available to watch back on our website from tomorrow, along with the first webinar we held, along with the slides as well that you saw. So thanks again, and I hope you enjoy your evenings. Goodbye.